and welcome. This is the Market Wrap. I'm Agam Vakil. In this truncated week, we have seen, advances when it comes to the Nifty at around 11,570, up as much as 19 points. And we've had some unusual ones taking the lead today. We have UPL standing right at the top, up around 4.5%, followed by Tech Mahindra. I will be talking about Tech Mahindra in just a bit, but we also have strength in Coal India, Grasim and Lupin continuing, along with the likes of Axis Bank, and Dr. Reddy is also lending support. So all-round strength coming through. On the losing end, some weakness in Tata Steel along with BPCL. Vedanta and HUL also bearing down to a certain extent on the broader, or rather the major indices. When it comes to the broader market index such as the NSE 500, the advanced decline ratio is fairly evenly poised between the gainers and the losers, as you can see, 1:1. Suven Life Sciences stands right at the top, advancing by 11%, and Kajaria Ceramics is the other one from the mid-cap space, which has been advancing by around 11%. We have more gains in KRBL, up 8.5%. Reliance Home Finance is the unusual one, which has picked up steam today. That's up 8%. KC International, Torrent Power, as well as Cummins India, all advancing by well over 6% in today's day of trade. On the losing end, some amount of profit taking in HDIL after the substantial strength that we saw in the company last week. Unitech along with HDIL from the realty space bearing down on the broader market index. JBF Industries, Rain Industries and KIOCL also showing some weakness. Future Lifestyle, of course, also down by as much as 4%. But on the whole, it's been a fairly stable day if you consider the benchmark indices, which have been largely range bound in today's day of trade with largely average turnovers too. But from our perspective, let's bring in our markets editor, Neeraj Shah, to give us an idea of how he's reading these cues. So Neeraj, how are you reading them?
I'm reading it like the weekend, which is why I have sleeves folded, Agam.
Right.
But no, not really, just a small break tomorrow. But interesting day of consolidation, nothing too much otherwise. This morning we were talking about how the nature and the texture of this rally has shifted ever since the end of the June series, whereby while everybody's talking about how mid caps and small caps are not participating, the Nifty's gained 9% since June 29, circa 9%, give a point here and there.
Right.
The mid caps and the small caps have been 8% and 7.8% respectively. So the broader markets too have moved up. And we are expensive. I mean, the PE multiple numbers, that the chart that we had pulled up in the morning, we are the most expensive PE multiple in a decade.
Right. Yes.
The difference between the earnings yield and the GSEC yield is the highest since December 2007, almost since December 2007. Now, all of these points point toward what all of you and I and everybody else know, that we are in an expensive zone.
Right.
But there is buying happening. The nature of the stocks which is taking the market up is changing, and that is only positive. Global market people are not unduly bearish, but you have to admit that we look slightly stretched, both on the fundamental and the technical parameters. So remains to be seen how long does this last. Just one last point. I think today the nature of the broader market rally was very, very interesting. Suddenly you had this pack of ceramic companies doing well. You will probably know more about it. And the VIPs of the world, again, something that you track, were doing extremely well for themselves. Mid-cap IT and large-cap IT, again, something that you track was doing very well. How many sectors do you track which are doing well? But yeah, I mean, the point that I'm trying to make is the texture of the rally is slightly different than what was preceding June. Let's see for how long does it last. Seems difficult though.
Yeah, well, we're going to have to wait and watch on that one, Neeraj. Thank you for joining us
Thanks,
and giving us that perspective. Well, that's a fundamental standpoint and a few factors that you can keep an eye on. But what about the technicals? What levels can you watch out for as we see the Nifty still at around lifetime highs? This is what our technical analysts are telling us. Listen in.
What we are witnessing in Nifty is that if you look at it technically, yes, it has been displaying bearish divergence for quite some time. But overall trend still remains positive because the medium term and the long term trends are clearly extremely strong. That's the reason we are seeing that in spite of Nifty trading in overbought zone for significantly long period of time, it continues to trade and we've been on the buy side most of the time. But I would suggest that tomorrow also being a holiday and Nifty slightly being on a bearish divergence note, one should not build fresh positions at current levels.
The markets could see some bits of profit booking soon, and 10,550, 500 could act as a resistance zone, and we may see a reversal back to say 11,400 levels. So with that intention, it is prudent to buy a put option of 11,500, which is quoting somewhere close to 47-45 levels. Keeping a stop loss somewhere close to 11.3 and expecting a move back to 11,400, which can yield a good return of around 85 points.
Right, they're shifting focus to one stock today, which has advanced, and that's Tech Mahindra in the IT pack. Now, we do know that the IT pack has, in general, been doing well on the back of the weakening rupee against the US dollar. But we've had an upgrade today on Tech Mahindra, on the back of which it has moved up by as much as 3%, well over the mark of 700 in today's day of trade. We have Bank of America Merrill Lynch putting in a buy rating on Tech Mahindra, upgrading it and putting a price target of around 800. And the thesis of this upgrade is essentially an up move and an up cycle in the capital expenditure in telecommunications, case in point 5G. Because of that, Bank of America Merrill Lynch expects Tech Mahindra to be in focus, considering 40% of its revenues comes from the telecommunications space. Let's not forget the up move in the US dollar against the rupee will also be something which will benefit Tech Mahindra going in. And because of that, they do see a substantial growth to come through for Tech Mahindra, and that's the reason why they have upgraded the stock to buy and put in a price target of around 800, which is well over 100 points from current market levels, considering Tech Mahindra did close at around 700 to 703 mark per share. That said, with that, it's a wrap on the markets, but lots more lined up, so stay tuned in the Bloomberg Quote.